Hey everyone, welcome to the most busy week of earnings season. So in today's video, I just want to go day by day, talk about a bunch of the higher profile companies that are reporting, what companies in particular I'm going to be looking forward to. We'll look at their stock charts a bit and just talk about what has been going on with the companies, what may propel their stocks upwards or downwards. But yeah, this will just be pretty off the cuff video where I kind of go through and talk about my thoughts on the week ahead and what I'm excited for. If you haven't done so yet, please consider subscribing to the channel if you like this type of content. I also do lots of stock analysis, earnings reviews, that kind of jazz. We're still a really small channel, so it would be awesome if we can get more people in the community and on board. If you like this video, be sure to like it. And also, if you own any of these stocks or have any comments on any of these stocks, would love to hear your opinions in the comments. So let's get into it. On Monday, we're kicking it off. I was going to say with a big day, but every day next week is a big day, maybe with the exception of Friday. But a couple of the stocks that I am particularly looking forward to their earnings. SoFi is one that I find to be an interesting name. Just going to their stock chart here, this stock has been absolutely crushed over the last year, 2 years. It really took off it went public during COVID and really just took off, went up 150% out of the gate. And then since then, it's kind of been up and down a bit. But then ever since the end of 2021, it's been in a downward spiral. One of the biggest things I think that's impacting this company is government school loan debt in the U.S. I think they get a lot of their consumers in relatively young, those like university, college age students, and they help them manage their student debts, try to get them lower interest rates, stuff like that. That goes into propels them into car loans and stuff like that. So they really get their consumers into the business through loans, whether it's student loans or car loans, I believe. And I think obviously on the student loan side with the government kind of halting payments, that's really impacted their ability to acquire customers and cross-sell them on their platform, which was, I believe, their whole growth model. And then now with interest rates going up, less people are taking out car loans or buying cars. So they've just been hit really hard because of those things, to the best of my knowledge. It'll be interesting to see if they're able to, despite all of that, inch closer to profitability. I believe quarter over quarter, they're still unprofitable. But if you just look at the revenue to net income, it looks like they've increasingly become more like sequentially higher gross margins. So last quarter, they only lost 15% of revenue. The quarter before that, it looked like it was closer to 20. The quarter before that, it looked like it was 30. So you can kind of see as they're growing revenue, they're achieving some level of scale on margins. And as this continues to grow, hopefully their net income can trend upward. Obviously, in the market we're in, negative net income is not really thought well of, which is part of the reason the company's just gotten destroyed. So I don't own the stock. It's not one that I am necessarily interested in this environment. And the type of businesses that I prefer to invest in. But it's definitely one that I like keeping my eye on as just kind of like a proxy for fintech and how fintech's doing, since it's a pure play in that category. The other company I'm interested in on Monday is Whirlpool. So Whirlpool, obviously the maker of lots of like appliances, stuff like that. A lot of different correlations they had to the boom in 2020, 2021. New houses being built, that's a big customer of theirs, but also strong consumer demand to upgrade things in their home. So you can see the stock went up before COVID, was about where it is now, to be honest, which is interesting. But from there went up 50%, and now obviously down all of that back to 150 a share, about an $8 to $9 billion company. Pays a good dividend for people who like that. And I thought they were trading cheaper, so I'm not sure if there's some accounting propping down their PE. This is one that I'm not overly interested in buying, but I think it's a great proxy for the housing industry, as well as to some degree consumer health and stuff like that. So it's one that I'll definitely take a peek at their earnings next week to see how they are performing. Going on, or I guess just wrapping up on Monday, some other notable names if others may be interested. High Tide, so I believe is a marijuana company. Ryanair, Discount Airline, some financial companies. So lots going on, but those are the two that I'm kind of interested in. Going on to Tuesday, UPS. UPS I find to be an interesting company. I've never owned the stock, but they do trade at a reasonable price to earnings. They do pay a decent dividend, and they have gotten hit. Actually, not as hard as I thought. I guess they've made a bit of a comeback here. But I think this is a great business. I need to do more research if the valuation ever got to the point I was interested in the difference between FedEx and UPS in terms of their competitive advantages and stuff like that. But that is a business that I think will be along for a while, and while somewhat cyclical, should be able to persist through any downturn. And as e-commerce purchases and stuff like that accelerate, it's not a spot that I think is a bad place to own a company in. So don't own it today. Have never owned it, but if the valuation continues to get cheaper and cheaper, it's one that I'd consider looking into adding. So I'll look at this one. Once again, in addition to mild interest in the stock, I think UPS serves as a great proxy for global e-commerce demand, as well as just general consumer health as well of how many people are buying packages. So that's one that I will definitely tune in. Probably not listen to the call, but look at the earnings release. On Tuesday, lots going on Tuesday. Caterpillar, big for construction. Spotify, maybe a proxy for big tech. I think Netflix reported pretty strong subscriber growth. We'll see if that correlates into Spotify experiencing the same. EA is another one for video games that's interesting. Match Group's actually a cool one too. That one's gotten hit 80-90% last year, I think, even though they've bounced back a bit here. So lots going on. But in terms of ones that I'm really interested in, Mondelez, I own some consumer products in kind of CPG type companies. So this is a stock that I'll look for their top line release. They pay a small dividend, 2.5%, and they trade very richly. They've always traded pretty richly, and they're close to the top range of their 52-week. So not one that I have on my watch list, but one that I'll probably tune into. And then the other stock on Tuesday, McDonald's reports on Tuesday. This is a stock I own, but it does also, similar to Mondelez, trade at the top of their 52-week range. And they've been just firing on all cylinders, not really feeling any weakness in the consumer since people tend to trade down in bad times. I think the stock actually went up during the Great Recession in 2008. Or at least their profit did. So one that I'll definitely listen to the call because it's a stock that I own, but not one that I'm looking to invest more money into. Going on to Wednesday. So a couple of the stocks on Wednesday that I find interesting. Waste Management is a stock that I used to own. I sold out of it because the price to earnings just got super high. I believe it was almost in the mid 30s by the time I sold. Altria, cigarette company. T-Mobile, interesting based off the fact that I do own some telecom companies and a telecom ETF. So I'll see how they do. Peloton, see how their turnaround's going, if they're still bleeding money, or if there's any signs of life there, if they announce any traction on potentially being acquired, which is why lots of people own that company right now, I believe. But the one stock that I'll definitely listen to the call and really interested in hearing from is Meta. So Meta is a company that I do own. They've had a wild few years. Wow, down 20% over the past 5 years, but cut in half, more than cut in half over the last year. You can kind of see they've actually had a 70% jump from the lows just in the last, 90 days, which is pretty crazy, but it speaks to the kind of volatility going on at that company right now. What I'm really looking for, obviously, I hope they have good advertising revenue and growth and engagement, etc. But what I think will really make this stock jump and become a $200 stock in the near future is just any signs of decelerating spend on Reality Labs, any sign of Mark Zuckerberg coming down to reality on, no pun intended, just on the idea of where the consumer is going to be in 5 years as it pertains to VR, maybe spreading out the spend over a longer period of time. I think the stock would explode off of any news of that because their core business is trading for way too cheap. It's just being self-inflicted wounds from the Reality Labs investment. So that's what I'm going to be hoping for on the Meta call on Wednesday. Going on to Thursday, another pack day. This is probably the day of the week for most investors. You got Apple, you got Alphabet, you got Amazon, three of the biggest companies in the world. Starbucks, a premium coffee company. Hershey, big CPG company. You have some healthcare pharma companies. Sony, the diversified entertainment company. So tons of stuff going on. I'm just going to focus on the top ones that I'm interested in. The first one, and I think I missed one. Oh, no. Oh, yeah, I did. Estee Lauder, super premium, super expensively trading consumer beauty company. So we're going to talk about some of these names here and what I'm kind of hoping out of them. Google, I'm really hoping that they report sequential and year-over-year growth on YouTube. That was one of the areas of weakness in their last call, but a business that I believe in a lot long-term, and I think does a good job of diversifying their ad revenue away from just solely search, which is also a great business, but you don't want all your eggs in one basket. So I'm hoping they have good YouTube numbers, good YouTube growth. And then the other thing I'm hoping for is, while small, I'm hoping they talk about progress on their cloud side of their business. So I know they're not going to be profitable, but hopefully good revenue growth, good margin growth versus last year and last quarter. So that's some of the things I'm hoping for on Alphabet. They also recently acquired some NFL rights. So I'm hoping that they talk about that a bit, give some vision in terms of what the plan is with sports and that, since I believe it was a $2 billion investment. So would love to hear more about what the long-term plan is there. Apple, I did a video recently on the stock, but overall, great company, great business. Consumer facing though, very expensive products they're selling, even though lots of them are staples. And I really like the service exposure, but just at the current PE, not something I'm currently overly interested in. So we'll look for their numbers. If they get destroyed, which I don't think they will, I'd consider buying in, but just a spectator at these prices. With that being said, Apple is such an important stock for everyone, given they're in every ETF. They're the biggest company in the world for people, and they're probably the most commonly held stock. So lots of companies rely on Apple to post good numbers since they're affiliated with them. So we'll see how Apple does just for macro economy. Similar to that, Amazon, just great proxy for how e-commerce is doing at large. Also with AWS, Azure at Microsoft kind of mentioned some weakening and decelerating of cloud spending and appetite for cloud spending. So we'll see if they're losing share versus AWS, or if AWS kind of says a similar thing. Couple other ones we got here. Hershey has just been killing it. Last year, market's down 20%. They're up 10%. 5 years, they've over doubled, not including the dividend. So this is one that I think they've been expanding pretty heavily into snacking, in addition to obviously their core business of chocolate. So they bought some popcorn businesses, stuff like that, pretzels. No interest at the price to earnings that it's currently trading at, but just similar to like Mondelez, I just like to understand what's going on in this space if they're continuing to grow their business, and how constant currency versus FX hits is impacting their EPS. Starbucks is another one on Thursday, so it's a stock that's definitely gone on a run here. I believe from the bottom they are. Bear with me here. They are up over 50%. So got hit really hard. Um, China exposure, etc., weakening consumer, blah blah blah. But they've rebounded almost all the way back, up 50%, over $100 a share, $125 billion valuation. I'm not sure if his P is right. It looks a bit high to me, but nonetheless, um, not interested at these values. But similar to some of the other consumer companies, just interested in how they're holding up, what it means for the general consumer, and how that may impact some of my companies that I do hold. And then lastly, Estee Lauder, very expensive company. I don't know if it's actually a 45p, but it's definitely like in the high 30s plus. So people are expecting tons of growth from this business. So it's just interesting to see these companies with huge valuations if they actually are successful in building into them. So that's one of the reasons I'm just interested to see how Estee Lauder comes across on Thursday. So I guess just summarizing, because on Friday it's really nothing that I'm overly interested here. Just summarizing, um, I'm interested in a lot of the earnings that are coming this week, but for the most part, it's just to get a gauge of the general market, the overall consumer. There's not really a name that I'm interested in adding to unless valuations adjust largely. Alphabet may be one. If they get hit really hard and I think it's undeserved, I may average in a bit more. But generally speaking, here this is just a sit on the sidelines week for me and just evaluate some of the earnings that come through. But I want to hear from you guys. Is there anything this week that you guys are really interested in? Are you looking to add shares on weakness on any of these companies? Or are you guys like me? There's really nothing this week that is going to make you dive into any of these stocks in a big way. If you like this type of content, please subscribe to the channel. Let me know in the comments any thoughts for the channel, any videos you want to see, any stocks on the screen that you own and have any thoughts on. And if you like this video, please be sure to give it a thumbs up. I really appreciate everyone who watches to the ends of these videos. So thank you very much, and I'll see you guys in the next one.